All right. Hey, everyone. Welcome. Today is Wednesday, and we're in the middle of the week here. And today on this stream, this is what we're going to do. We're going to use the Trade Scanner Pro to try to find trade ideas with the Nasdaq futures. Right now, I have Bitcoin up here. Uh, just wanted to give you a quick update on this pin bar. We talked about this on Monday, right? That had a little bit of an effect. This is wave four, okay? This is a little mini wave four, a sub wave four. That's what this is. So far, it's in line with the wave count that I've been talking about. If this is the little mini wave four, then we're likely to have a breakout at some point, right? This structure over here will break out and potentially push the 123 high, right? That's the fifth wave. If we get that, that's when you want to start really focusing on risk, because that's when the party's over. Okay. People don't like to understand that. You'd rather listen to Michael Saylor. I understand, but I look at risk, not Michael Saylor. And when there's five waves in place, and this is a fifth of a fifth wave, meaning it's a large magnitude completion, the next corrective wave is likely to be very large. Right now, again, that doesn't happen overnight, and we have no catalysts yet right now to push such a thing. But you have to just be the market becomes vulnerable to something like that at that point. That's the way you have to treat it. So you control risk, you day trade, you swing trade, you start to reduce your investment exposure, right? Instead of buying more. This is not prices to buy more. Not at these prices. There'll be opportunities, just not now. All right, anyway, we're here to talk about the Nasdaq, not Bitcoin. So let's switch over to Nasdaq, right? MNQ1. This is the micro Nasdaq futures, right? Now, as you know, with the Trade Scanner Pro, I'm going to switch this one over here too. The first component is analysis. You must do the analysis first. If you don't, and you start taking random signals, you're not going to get anywhere with the Trade Scanner Pro. You're just going to take random signals. That's no good. You want to align with the general structure, right? So that's why you have to do some analysis first before you start looking at signals, right? So I'm going to turn these moving averages off. We don't need these on here. Let me turn these off. So what I like to do, as you know, in every stream is I like to look at the daily time frame first, right? And I'm going to make this chart bigger here so that we can see what's going on. Now, with the daily time frame, remember, I'm not looking back weeks and weeks and weeks of data here. I'm only looking back at yesterday and today. That is it. That's all I'm interested in. Nothing else. So, I don't have my tool here. Okay. I guess it went away. I'm looking for today's low. That's the overnight low, right? I'm looking at yesterday's low. Look at that pin bar. Look at this pin bar. That is bearish. Very similar to the Bitcoin one. Now, we went below it and it looks like we're not following through. Okay, but still, it's there, right? We have to recognize that. Then we're looking at here the today's high. Oh, that's the wrong thing. Today's high, which again is the overnight high, and then yesterday's high. Those are my active support and resistance levels for my day trade session. So that means if we're messing around near one, which we're sort of near one, then I may be able to anticipate some type of price behavior there. That's why it's important to be aware of these. So these are my support and resistance references. Now, once I have that, I go to the next step. I go to the hourly time frame. Now remember, I know in advance that I'm planning to day trade, and I know that I'm going to use 30-second or 1-minute time frames. I know this in advance, which means I'm not jumping around from chart to chart looking for signals. Again, if you're doing that, you're using this wrong. You will lose money. I'm trying to make it so that you have a good experience here. That's why, people should take advantage of these streams, because this is like your training session and it's free. And I give a lot of valuable information during these sessions, especially when it comes to using the Trade Scanner Pro, because it's not an intuitive tool. You're not going to learn these things on your own. Okay, now, So I'm using my hourly time frame to get a sense of price structure. And I'm going to use this information to trade my 1 minute and my 30-second time frame. Okay, those are the only two time frames that I'm going to be looking at. Now, as you can see here, we rejected this level. All right, looks like we rejected the, I guess it's the overnight high. We rejected that, and it looks like we're on our way to yesterday's low. All right, that's what's going on right now. This structure here, right, this is a lower high relative to this up here. So that is bearish. All right, so that's going to steer me to look for shorts, right? Because that's a lower high relative to that. Now you could say, but that's a higher high relative to this. Yes, but the thing is, you still have this. And if this lower high establishes itself, which it looks like it's going to do, right? We have about what, 15, a little more than 15 minutes before this candle closes, and it establishes a lower high. That's not bullish. That's bearish. So the support is likely to break, right? That's how that's my mindset going into this. So I'm going to be using the Trade Scanner Pro and looking for shorts for those reasons, right? Now, the Trade Scanner Pro is a momentum confirmation tool. It's not a forecasting tool. It's a confirmation tool. So I want to confirm this momentum, and then it gives me a way to define my risk. It gives me a profit objective, and hopefully increases the probability that I'm going to be on the right side, right? So I just turned on the Trade Scanner Pro on this time frame. Now keep in mind, there's a long signal there. That's not in line with my analysis, so I ignore it. All right. Anyway, this is an hourly chart. I'm not taking trades on an hourly chart. Now I'm going to switch this over to a 30-second chart because that is where I'm looking for trades. If you notice here on this 30-second chart, we have it says trend is bearish. See that? Oh, you can't really see it because of the overlay. Can I move that overlay out? Yeah, I can move the overlay a little bit. Let's see here. Okay, I moved it a little bit. I'm just covering up the time on the bottom. It's not a big deal, right? You need to be able to see that. All right. See that? Okay. So trend is bearish. Now, so if the market changes on me and that says trend is bullish, that means the Trade Scanner Pro will not be calling shorts. It'll be looking for longs. My assessment is bearish, so I'm looking for shorts. So I want to align the Trade Scanner Pro with that idea, okay? So I'm not going to start buying. I'm not going to take any counter trend trades. None of that. That's more advanced stuff. I'm trying to keep it as simple as possible. If the market bounces for whatever reason and this turns bullish, because that happens a lot on these small time frames, we simply wait for it to turn bearish again. All right? Let me know if you have any questions. Now, when you get the Trade Scanner Pro, you got to make sure you go to the control panel and you got to turn these controls on. The trailing stop, the show previous trade, and the heads up. Otherwise, you're missing some important information. The heads up are these columns here that let me know a trade is likely to appear in the next 3 to 5 candles. I'm going to change this chart over here to a 1 minute. That's a 1 month. I want a 1 minute. Okay. This is my 1 minute chart. Now on this chart, also on this chart, it's hard to see, but the trend is bearish also. Okay. If I make this bigger, you can see that trend is bearish. Okay. That's what I should see if I'm expecting bearish trades, right? So that's my 1 minute. Okay, cool. So that means the Trade Scanner Pro is looking for shorts. Great. Now, also it changed, right? Because you see this green column right here? At that point, it was looking for longs. That's why the column is green. But then the market changed and it turned bearish. So now it's looking for shorts. So if it gives us a heads up, it's going to be red columns. All right, does that make sense? All right. Let me know if you guys have any questions about that. Now, so I just want to mention, I am now an Apex affiliate. As you can see on the bottom of my screen here, you could save 80%. They have an 80% sale. you don't need my coupon code to get the 80% sale. You can simply go to their website and just sign up or whatever, and you get the 80% savings, right? But by using my coupon code MPM, you help me support my channel and you encourage me to continue to do these streams. Because as you can see with my numbers here, that's why I pulled back on my streaming time, because no one shows up to these streams. So, it's a really poor use of my time. I've been doing this for since April? And you may say, oh, you're just not patient. Well, you can make that argument, but the thing is, it's not that I'm not patient. It's that my numbers are going backwards, right? Like I could see if my numbers were increasing slowly, but they don't. So I have to do other things to cultivate the following around my channel so that when I do these streams, it reaches more people, right? YouTube is not going to promote this for me. So, hey, Hussein, how are you? Cool. Nice to see you too. Thanks for stopping by. So, yeah. So anyway, if you are going to do an Apex evaluation and you want to support the channel, you can use my code and I get a small cut, right? That's the whole point of being an affiliate. I like Apex. I've been using them before I was an affiliate. They only made me an affiliate a week ago and someone signed up. I don't know who, because I don't see the name, but I appreciate that someone signed up. I got a notification about that. So again, Apex is good for the beginner, right? Every prop firm has its pros and cons. Apex is not perfect. And Apex has some things that I don't like, but I use them because I mostly like that they are cheap. And in the beginning, you must have low costs, right? So like, for example, right now you're saving 80% on their evaluation. So it's only $33 for a 50K account. Sometimes they have 90% savings. That's even better, right? And the evals are only like $16. Those are the ones when you want to buy a couple of them, and then you just want to flip a coin and go all in. That's how you beat them. Okay? It's a coin flip. You go all in and you hope you're right. That's how you beat them. That's how you beat them in one day. Now, they have a consistency rule, but there are times like right now where they waive the consistency rule, meaning typically you have to have 7 days of data or 7 days of trades. But like right now, for example, they say, oh, you can beat the eval in one day and we'll let you through. Okay. Now, that sounds great, right? But there's always a catch. All right, let me switch over to a 15-second here. I suspect there's nothing there, not even on a 15-second. All right. So there's always a catch, right? So what's the catch with Apex? The catch is when you beat the first eval, it's a 2-step process, which they do not make clear. It's a 2-step process. You beat the eval, right? And then you pay the real fee, which is the setup fee. You could pay $140 or you could pay an $85 subscription, which means you get charged $85 a month, or a $140 one-time fee. Which one you choose really should depend on the reliability of your system and your experience level. If you're new and you beat the eval like I'm suggesting with the flipping a coin going all in, then and you don't have a proven system, then it's not worth paying $140. Pay the $85 because you're probably going to blow that account. Because here's the thing, when you reach a performance account, which is the next step, you have to make another $2,600, which is almost the profit objective again. So you have to do that again before you can request a payout. They don't make that crystal clear when you're signing up, or even you find that out as you go, or if you read the fine print, right? So that's why you have to pay attention. So is this still good for beginner? Yes, because it's still relatively cheap. And this is where you want to put in your learning time, because it's cheap. Now, for more experienced traders, there are other prop firms out there, like ones that it's straight to payout. There's no evaluation phase, right? But they're way more expensive. They get $400 to open one of those accounts. $400, that's a lot. And they have all kinds of rules so that you can't just make money and request a payout, right? Because again, it's not in their best interest to pay you out. Those type of accounts, I think, are more appropriate for more experienced traders. Like, you should have beaten numerous evals with something like Apex. You should have taken a few payouts. Like, you have a proven system that's reliable. And that's going to take time to prove. You have to build up the confidence. It's not going to happen like right away, like we all want. Okay, just to kind of give you an idea. And it's not very it's not very encouraging, which is why no one likes me. But you know, I conducted that experiment with the evals. Like I always tell people, go all in and basically hope for the best. I basically had done something like that, but with the Trade Scanner Pro, and I beat the eval. Right now, to get to that point where I figured out how to play that probability game, took me 18 months to figure that out. Okay, because when I first started with these prop firms, I was doing dollar cost averaging. I was doing all kinds of nonsense, which doesn't work. Okay, so it took me 18 months. That's a long effing time. And meanwhile, you have all these fake gurus, right? Now, oh, I beat the eval in 2 days. I don't know what he's doing. He must be a moron, right? I found out that the way they do that, the way they beat those evals so easily, because I'm like, man, there's something up here. There's no way they're beating these evals so easily when it takes me that long, and I have more experience than these people. We're talking morons here. We're talking people who have no business being in this business, or at least teaching others. No business. And you know, so I'm watching them and look, oh yeah, I beat this eval. Oh, I beat that one. Oh, I beat Top Step. Oh, I beat Apex. Oh, I beat them all. Well, turns out these prop firms, what they do, if you have a big following, they give you free resets on these evals. They won't pay you out on them. They don't pay you out, but they give you free resets. Okay, I saw that. Free resets. So, of course, you can keep resetting the account for free, and you're going to beat the eval. You don't get paid on it, but it looks good. It makes you look like you know what you're doing, and it encourages your followers to sign up, right? Whoa, this guy is so good, or this girl is so good. I got to follow this person, right? So there's so many scams and tricks in this business that it's sad. It's pathetic. And guys like me can't compete. That's why no one follows me. I mean, besides my bad marketing techniques, I'm not a good marketer and all that stuff. Like I know where I've gone wrong there, and I'm taking the time now that I have to work on that. But it's going to take me some time. I say that in every stream. It's going to take me time. I have to build like a backlog of videos, like tutorial videos to watch. I got to connect my social accounts and have them to be more active with shorts. There's a lot of stuff I have to do. Okay. So it's a slow process, but when I build that, you know, then perhaps I'll have more people coming to my live streams. But because you have so many frauds, like with the Ferraris behind them and all that, they ruin it. They basically they fleece the business, and they take all the money that was there, and then they screw everyone, and then no one comes back. On top of that, we have a situation, right, with inflation right now. I was watching a report about this, and the average consumer is tapped out. They have no money because of inflation, right? They can't keep up with the rate of inflation. That's going to affect this type of business, right? Because who am I catering to? Average consumers, pretty much. What is retail? Average consumer, right? So that's also going to make it hard. The PPI report came out earlier today. Clearly, the market doesn't like it. We had the CPI report yesterday. Inflation has ticked up since May, from May to June, I believe the measurement was. And it's ticked up, right? Which goes against the argument of cutting rates. And that's been a pretty big argument. Look at this market going lower. No signals. Let me just check the 15-second. Was there anything on here? Nothing. Okay, when the market grinds like this, it's just not pulling back far enough. Excuse me, I'm not even getting a heads up. Man, I probably have to go to a 5-second chart. See, there it is. I'm not going to trade a 5-second chart. Look at this. Look at that signal. I'm not going to trade a 5-second chart, because when this thing goes wrong, it's bad. Okay, so I'm just going to stick to my 30-second. If I have no trades, I have no trades. Also, what I'm going to do here is I'm going to start with one micro lot. And if it's working, then I'm going to add like 4 or so. I have to increase my size. I have to get somewhere. I've paid 3 subscriptions or 4 subscriptions on this account. And I haven't been getting anywhere with it, because now, especially, I only trade this account once a week, right? I'm not even doing it 3 times a week anymore. So it's going to take me forever if I'm going to beat this eval, right, and reach the price objective. So I have to increase my size. And if I blow the account, I blow the account. That's what I have to do. That's what you have to do with these. Otherwise, you're just wasting time. Okay, so I'm waiting for my signal. I'm not going to make one up. That's one nice thing about the Trade Scanner Pro is it really helps to keep you out of trouble, right? When there's a lot of noise, and sometimes it gives noisy signals. So that's why in this environment, as you know, I'm going to apply the entry filter where I'm not going to actually take the signal. I'm going to wait for a retest of the entry price right before I start the position. That's what I'm going to do, especially in this environment. So anyway, yeah, so that's the way things are. Inflation is really becoming a problem, and they're saying that the uptick that we saw in May to June was a result of the tariffs, right? It's the beginning of the effects of the tariffs, and all we keep hearing about are more tariffs, more and more tariffs, right? More tariff this, tariff that. I mean, that's why Bitcoin rallied. So that can be a serious problem. So in this environment, what to do? Well, I will tell you this: pay close attention to the bond market. Just that's going to be where you see if there's going to be a break and there's going to be problems and drama, you're going to see it there first. Okay? The 30-year treasury is at like 5% yield, something like that, which is pretty high. Yields have been rising on their own. Okay? And the Fed isn't even raising rates. That's when the yields usually rise. They're rising on their own. That means bond prices are selling off, which means no one is buying bonds. No one is buying treasuries. They don't trust the US government. And if they're going to buy them, they want a higher yield. So this is what we're seeing. Now, the bond market, if the bond market starts breaking, watch the 10-year note. If it starts breaking supports, right? It's a very slow moving thing. But if it starts breaking, right, the next thing you will see, if it starts making significant moves, the next thing you'll see are bank failures. Now, remember, the Federal Reserve has or maybe it's the Treasury, they have a program in place to bail out any of those bank failures, right? So they're going to try to cover it up and move it along quickly, right? They don't want those to linger, right? But watch for those. When you start seeing bank failures, that's like the next step, okay? And if they can't control them, that's when you're going to see it. I think that's when you're going to start to see trouble, like in the stock market. Right now, the stock market's in ridiculous mode, and it's the reason why it's like that. And Bitcoin, new highs, and all that stuff. The reason why the stock market's been like this is because it's the value of the dollar, right? The dollar is losing its value quickly, and so buying assets like stocks are where you want to put your dollars because it preserves their value, right? So that's what we're seeing. We're not seeing stock market highs because of economic growth, which is a problem. It's going to bite the market in the ass at some point. That's why it's like, okay, if you're an investor, great. You're all happy. You're all thinking you're savvy and blah, 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 blah. But you're at the mercy of the market. When that market turns, and who knows when it turns, right? And I tell you, the first signs are going to be the bond market. You're going to be stuck. Just like in April. A lot of people were stuck, but they turned things around and everyone's happy, right? But that was looking pretty bad there for a brief week or two, right? So, and that was the only pullback that we've had, real pullback, because of the tariff stuff. So just that's all I'm saying is risk. This is a high risk environment for those reasons. We're not in a high quality bull market environment here. In these type of environments, and I'll always say that, because I'm more risk adverse, stay smaller, invest less. These are not investing levels, even for like the Nasdaq or the S&P. These are not investing levels. You want to take some stocks, a number of these stocks that we've been looking at in recent days have made some pretty significant moves. You don't want to be buying them at the tops. So there's nothing really to do, right? Take small bites, swing trade, get in and out, take a lot of time off, right? Until we see a serious pullback. And that pullback will come with a catalyst. And you want to avoid getting in too early, right? So like I still have that problem, getting in too early, thinking, oh, okay, the market's it's stabilizing. It doesn't matter if it's stabilizing. If the catalyst is significant, the technical stabilization means nothing. The catalyst has to change in those type of situations, right? Like we saw in April, the catalyst was in effect for like 2 weeks, and then it went away, right? And since then, we just grind to new highs, and everyone's playing with themselves as a result. So that's all I'm saying is be careful. That's why I day trade, because when things get out of hand like that, I'm not exposed to anything. I'm not buying anything. I never buy highs. I don't like highs. So to invest, you got to wait for a significant pullback. Right now, I'm saying that because I got no signals here from the Trade Scanner Pro. There's nothing for me to do. I'm waiting. I'd still like to go short, right? We haven't changed. This structure pretty much confirms the short. I see lower highs and lower lows. Okay, that's nice. We've been overlapping here a bit. Look at that. That's a little concerning, right? That there may be a trend change happening here. It is now just after 10 o'clock. So the initial range, I'm sorry, the opening range is in. Let's take a look at the 30-minute time frame. Now, again, we'll see signals like on the 30-minute, but again, if it's not in line with our analysis, we ignore it. This is a long signal. It's not in line with the analysis. Just ignore it, okay, or turn it off. The opening range is this candle right here. It's 9:30 to 10 o'clock. So if we break below that, then that's going to confirm bearish. If we don't break below that, like it's trying to find, this is obviously the opening range low, this area. It's trying to find support there. If it could find support, it'll work its way back into the opening range, right? And then shorts are going to be a pain. So if I see that bullish structure developing, like right now, if this C is turning into a higher low, see that? Without something like the Trade Scanner Pro, I may short something like this, especially if I'm using like an RSI or something like that. And I'm like, oh, it's a short, blah, blah, blah. But this may or may not be a short, right? We have a higher low over here. This thing may reverse. It's very possible. It's trying, see? So if we get that and my trend on this time frame turns bullish, then that means my short idea is no good. That means I have to wait until it turns bearish again before I get signals. Sometimes you just have to sit here and wait. But I could tell you, waiting is better than forcing trades. Okay? On all these trades where I lose money, if I had just waited longer, or if I had just, for whatever reason, right? Because some of these trades have been aggressive, like on the previous Wednesday, I was aggressively taking trades. If I had just waited, right, I would have lost less money. So, of course, I could say that after the fact, but so here I am before the fact. I'm waiting. I'm not going to force trades, especially with this type of environment. So, like I said, today we had the PPI. Tomorrow we have retail sales. I believe it's tomorrow, Wednesday, no, Thursday. Yeah, we have retail sales tomorrow. I believe that's an 8:30 a.m. Eastern time number. So you want to be aware of that number. I believe it's that time. It could be 10 o'clock, but I think it's 8:30. Okay. So that's not usually when the market's open, but it set the tone. So you want to be aware of it. All right, look at this. See what I mean? Consolidation, high or low. Look, we're getting our first heads up for a short. See that? And we're going back up to this potential. This was a potential support, I guess, and it broke. Was that? Yeah, that was a support. Yeah, and it broke. So now it could be a resistance. So let's see. In this situation, I may have to go to the 15-second. Oh, see, look at that. 15-second. All right. I'll use this 15-second signal because I'm not jumping into it anyway. I'm not chasing this. We have to retest that blue line. That's the filtering method. You're not going to learn that by using the Trade Scanner Pro on your own. We have to retest the blue line. There we go, like that. Okay, and then we have to turn bearish again. Right? That's why I don't take the initial signal. We have to turn bearish, meaning we get a clear red candle. Again, this is a 15-second time frame. These time frames, I don't like the 15-second time frame. It's very erratic. There we go, something like that. But I want to see, okay, something like that. Okay, I'm shorting one. Now, if you notice on my chart here, you can see the order now. I changed it. I got to do it on this chart too. But you can actually see the order this time. See that on the 1 minute? But I took that trade based here on this. Okay. Now, this is a 15-second chart. Am I going to add to this? Well, I would like to, but I'm not going to add to it now. Right? If I'm going to add, we got to go back in here. So if I don't have the opportunity to add, then I don't. All right, so let's see. Maybe I do, maybe I don't. If I do have the opportunity, I'm gonna put on 3. These are micro lots. Okay. If I have the opportunity to add. Now the reason why I'm doing it like this is because if I'm wrong, I lose on 1. Okay, I like that. Can we close? 15 seconds. I like the pin bar. Okay, I'm gonna do it. This is aggressive. It's aggressive because that ad was like right in the middle. We weren't at the blue line, but I'm just going with that momentum. Now I'm gonna start looking to cover. Okay, if we could touch the green line, which is the price objective, I'm gonna start buying them back. I'll start with 1. Let's see. Now we're back at that range low. Remember that was the 30-minute. That was the opening range low. If we break that, this is there. We go. Buying 1 back. Okay. Can I buy it back? I'd like to buy 1 back. There we go. Bought 1 back. You can see the order behind me. All right. Now if we start getting green here, right? Some sharp green candles. I'm gonna buy more back, right? So right now I have, look at that. I think I have 4. I'm gonna buy another 1 back. So I have 2. Because remember the second 2 that I shorted were like over here. So not the best price. All right, let's see how I'm doing. Okay, I'm up $100. All right, it's not bad. Now, as you can see, my trailing stop is in effect. You can see it up here. When you do these type of trades with the Trade Scanner Pro, you got to respect the orders, right? The stop loss is all the way up here. That stop loss is 14 points. That's not a lot for the Nasdaq. Okay, that's not a lot. I only have 2 contracts. I'm going to prepare to cover them both if this thing gives me a hard time, which it can very well do. So I highly recommend using hard stops. I'm not using hard stops in this account. It's an eval account. It's an eval. If you're using a real account, or even with your eval, you should use hard stops. Simply you go to the order book and you put hard stops here. That's a good idea. Okay, I highly recommend that idea. And the reason is, if there's some news and this thing spikes and you're on the wrong side of it, you're going to regret not having a hard stop. You're going to lose a lot more money than you should be losing, right? So that's the habit you should be in. I don't do it on this account because it's just time consuming. And I just bang it out. If I lose a little bit more, who cares? It's an eval account. So, and plus I don't see, look at this thing. This thing sucks, man. But it may actually give me another entry, believe it or not. So even if it touches a trailing stop, I'm actually going to give it a chance to go to the full stop. That's a choice that I'm going to make. It's probably going to touch that trailing stop, but I'm going to look at this as a possible re-entry here, right? And if I do get it, maybe I'll short 2 more. Let's see. So we went to the objective. Remember, this is a 15-second time frame. Okay. And it looks like we bounced off that opening range low pretty much. All right. So that's got to keep that in mind. Now let's see if we could get some bearish candles here. Right? It's got to close bearish. That's not a bearish close. Okay, see what I mean? All right, I'm gonna have to do something about this. My blue line went away, so that's the problem. I could turn the trailing stop off, but I'm just gonna, what I'm gonna do here is I'm just gonna bang this thing out, because we may get another signal here. Let's see. Nope, not happening. We're going back to, all right, getting out. Screw this. All right, so the trade was, oh, look, I still made $20. Oh, no, I lost $20. That sucked. I was up $100 minus $20. All right. So I gave it back. I mean, look, this is ridiculous. Look at this move. Right? So that's not characteristic of a bearish trend. We're getting the signal again. I'll try it again with 2 micro lots this time. I'll enter with 2. First, we got to get the signal. Yeah. But hey, that's the market. Now the 1 minute may give us a signal, right? I'll try it again. If the second one gives me a hard time, I'm done. No need to keep fighting it, because this type of initial move off of the opening range low, that's not exactly bearish. Okay, so first I'm waiting for the signal to appear. Once the signal appears, which should be the next 3 to 5 candles, then I'm going to wait for a retest of the blue line. That's the entry filter. You must use that in this environment. Otherwise, you're going to have a lot of losing trades. Okay? That filter filters out a lot of losing trades. So the signal should be popping up here momentarily. And when it pops up, right now, if this thing just completely sells off, I mean, that's annoying. But what am I going to do? I don't want to force trades. Okay? Hey, Kai, I just wasted $20 on a below average lunch meal. In case, $20. Man, yeah, inflation, man, inflation. Even in Europe. So, yeah, $20 is no big deal. Thanks for sharing, Kai. So I'm going to try this again. If I get the signal and I get the re-entry, right? The filter. Now with that filtering move, there are going to be times when I get a signal and it just runs away without me. That's going to happen when you use the secondary filter. But this environment is not good for high momentum moves, right? Now look at this. So we're looking for shorts, right? This is a higher low. That's not characteristic of a short. So this move is concerning. All right, so maybe we may get a signal here. Maybe we get the fail. There's a signal. Okay. Okay, cool. Now, let's see if we get the re-entry. Remember, I'm not taking the signal. I'm using this as a heads up. What I want to see now is maybe we progress a bit and then we retest this blue line, or we pop up inside here and I get a bearish reversal up in here somewhere. That's what I want to see before I take a position. My risk on this trade is 15 points, assuming I short this thing at the blue line. Okay. Now, if it runs away without me, it runs away. I'm not going to chase it. Okay. I don't mind losing, walking away with a $20 loss. I don't mind. That might as well be break even. All right. So let's see. Now it's tempting to chase these things, but remember, this is a 15-second time frame, and they're highly erratic. Let's just take a quick look at the 30-second real quick. Anything here? No, nothing even here yet. Nothing even here on the 30-second. All right. So let's see if we could get a retest of the blue line. No retest. All right. What am I going to do? Not going to chase it. You got to get a retest. Okay. As you can see, this market has ridiculous moves, right? Like this. So it can easily happen. Now you may say, well, could you take this as a continuation pattern? That's very aggressive. That green candle back to the red, it's aggressive. Right? I would rather be a little more conservative with this, especially after this, which is not characteristic of a short. Look at this one, straight to the profit objective. What am I going to do? This may still turn into a trade if it bounces and retests the blue line, but if it runs away, it runs away. Okay? So you're better off like taking a small loss like that instead of getting all jumbled around in this thing, right? Buying it and then, oh, it's a long and then it's not a long, and then shorting it again and this thing runs up in your face, right? See, like this kind of thing. This could turn into a problem right here, right? This thing may spike back up to the blue line. And if it does that, I may have an entry. That's how you use these signals, especially if you're using larger time frames like 5-minute charts or 15-minute charts, because a lot of times when you pull up the chart, you've done your analysis and you see a trade has been in play maybe for a few hours, maybe even for a few days. And you're like, oh, I missed it. But if it's retesting the blue line, you may have another opportunity to get involved in that. So that's why it's especially important. Oh, look, the 1 minute gave us a signal. Okay. The 1 minute. Wow. So the 15-second goes beyond its profit objective. And the 1 minute gives us a signal. Okay, cool. Maybe I could work with that one. That's why I watched the 1 minute and the 30-second. Now, with this signal, I want to see the same thing. Green candle, retest of the blue line, something. I want to see something. Now you can see the 1 minute has a much greater profit objective. So even if I get half of that, I'll be happy. All right, so let's see how this goes. How much time is it? All right, I got some time still. All right, so let me know if you guys have any questions. If you haven't tried the Trade Scanner Pro, there's a link. You can see the link here on the screen. Try it out, 14 days free. Make sure if you don't want it, make sure to cancel it because there are no refunds if you wait till day 15 and then you send me an email. I'm not going to refund your money, all right, because it's not fair to me. You have plenty of time to cancel it. It's very easy to do. But you have to give it a fair chance. Okay, we retested the blue line there on the 1 minute. How are we going to close? I think I'm going to bang 2 of these. Oh, I pressed the wrong button. I don't want to be long. I want to be short. All right, let's see what happens. I have to bang this out. I want to be short. All right, I got out of that. All right, I just shorted it. All right, 2 of them. Now watch, we get the retest. See what I mean? It's churning me around. All right, let's see how this goes. That long was a mistake. I have no interest in being long. Okay, you could see my order. You could see the order line here on the chart. So that's where I'm short from. Looking for, momentum continuation. See if we can get somewhere near the price objective. Now see, look, it's not working. Retesting the blue line. Okay, maybe this is an opportunity to add. If it is an opportunity, I'm going to add 1. Right? No need to go nuts, especially if I'm losing. I'm not going to add a ton. So let's see if this thing turns around and gives me some kind of red candle. This is what I should have waited for. But all right, whatever. Much better price, right? But I'm still going to add. See, how bad am I doing here? Wow, I'm losing $100. All right. So let's see. Hey, oh, I can't read that language. Sorry. Don't know what you're saying there. All right. So let's see if we get a red candle, reversal candle here. The 15-second chart touched the trailing stop. It may give us another signal. Now, I don't need to trade both of these, right? It's one or the other, really. I just like to monitor both because sometimes we won't get a signal on one time frame, but we'll get plenty on the other. That's why I'm monitoring both. Maybe we get the bearish pin bar here or something, and maybe I have an opportunity to add. But man, I got a bad price on those 2. Okay, all I have to do is wait another minute. All right, so for me to add to this, I need to see a pretty sharp red candle. I don't see that. I see a pin bar over here, but that doesn't count. All right, that's nothing yet. This candle needs to close red. I don't see it. So let me prepare to bang this out. Like I said, I got to make progress with this account. Either I blow the account or, I do something good with it, with profit objective. The only way I'm going to do that is by throwing around bigger size. So bigger size meaning I start with 1 and then maybe I'll add 3 or something like that. Micro lots, not minis. If I do minis, I'll blow this account in 2 seconds. Okay. Very easy to blow this account with mini lots. A 50K account. I mean, even 1 mini lot or 10 points is minus $200 on 1 mini lot. So, you take a bunch of losses on that and you got problems. All right. Let's see if this thing gives me a red candle close. If we do, I'll give it a try. I'll add. I'm short. I'm from a bad price, but I'll add. This is why I have a defined stop. What's my risk on this anyway? Let's see. It's going to be bigger than 14 points because it's a larger time frame. 34 points. That's a much wider risk. But that's a 1 minute chart, right? So 1 minute risk on the 1 minute versus the risk on a 30-second. Look, we got another signal on the 15-second. I'm sorry. So the risk on the 15-second is much lower, right? 14 points. It's half. It's half the risk of the 1 minute, but it's not half the time frame, right? This is 1 minute versus 15 seconds. It's a quarter of the time, and the risk is half. That's interesting. So let's see if this thing, I got a red candle, but I don't like that candle. That's a doji type candle. We need to break the low. Now look, since we're inside this risk gap, and look, we're retesting, looks like we're going to retouch the blue line there. Okay, I can use that. All right, here we go. All right, I banged two. Now notice my entry, my average price just changed. You see that? It jumped up a bit. You see that? So you could see my position, right? I have 4 now. Hopefully this follows through. If it doesn't follow through, I'm going to have to say goodbye. In fact, to bang the whole thing out, I could just press this little X right here. See, I shouldn't be seeing this pin bar. That's not what you should be seeing. If the market's weak, this thing should close weak and the next candle should continue. Not this. This is bad. That's a bad sign. So I may not even let this go to the stop. I may just bang the whole thing out. Let's see. We're about to touch the stop on the 30. Okay, we touched it on the 15 second, but that's not the risk I'm using. I'm using the 1 minute. All right, I'm going to have to get out. All right, I'm out. I gave that a try. I tried to get around. I tried to throw around some size. Not a good market, right? I mean, look at this type of candle, fake out type of candle. That's going to happen. I'm not. You say, why not hold it to the stop? Because chances are it's going to the stop, right? No reason to take the full stop if you know that this thing is basically shouldn't be behaving like this. This is not bearish. So what happens in these situations is, and this happens to me a lot, the market starts out one way and then it changes, right? The market started out bearish and it's changing, right? If you notice over here, look at this. This changed from bearish to bullish. Hold on, I'll point it out here. See? Bullish. See that? That means it's no longer looking for shorts. See that? So I need to recognize that. My 1 minute is still bearish. That's why it's giving me the bearish heads up. But this market is clearly, it's not pushing lows. All right. It just established another higher low on the 1 minute. So continuing to short this, I mean, maybe you go for one more if you want to be aggressive. If that doesn't work and you don't make a lower low, then you stop shorting this thing because it's not going lower, right? You don't want to fight it. You have to recognize it as early as possible. And sometimes it costs money to do that, right? So this cost me minus 260, man. So I'm back, I'm 49, I'm back to 50K. So I gave back like basically $500 in between this session today and the previous session. I tried to get a little aggressive here, and it doesn't work, right? The market's just all over the place. So the thing with the Trade Scanner Pro is it's looking for trends. If the trend is changing and you're looking for a trend and it hasn't adjusted yet, then you're likely to start getting on the wrong side of the trend if it's changing. So that's the worst. That's the vulnerability of the Trade Scanner Pro. Trend change. As long as the trend is intact, it works great. If the trend changes, you start losing money. So I tried a couple of trades, right? There's no reason to continue because the trend is changing. So you say, well, start going long. Well, maybe, but I'd have to wait for long signals, right? That's going to take a while. For long, this thing's got to rally a bit. It's got to pull back. Notice, let's go to our opening range. Look at our opening range. So we went slightly below the opening range. This is the opening range candle. See that? And we reversed. See that? At the opening range low. So I shouldn't be extremely surprised. Now we're in the middle, right? We're basically in the middle of the opening range. So anything can go here. Anything can happen. So really, if I'm going to be aggressive on the shorts, I should be doing that up here somewhere if I'm going to do it at the opening range high. Maybe here if you get a signal, if you want to try it, there's a resistance there. But that resistance may act as a support. It may not. We keep blowing through it, right? So when the market gets tricky like this, usually the best thing to do, you tried a couple of trades, don't keep at it. Just walk away, right? That's the best thing to do. And if you it's very easy to get caught up and be like, it's a short. It's a short again. Maybe. But you got to wait for the signals. right? Because you're better off staying out than just imagining things, right? Looks like a short until it's back up here. Then it's no longer a short. Let's go. What is this? A 15-second? Let's go back to 30-second. So look at this. There's a sell signal on the 30-second. We have not seen a short for a while here. So what time is it? I'm probably not going to take this. Let's see. Now, again, here we go. The signal was generated on this candle, right? Once the candle closes, we get a green candle. This is why you wait and you don't take the trade right away. So what you want to see, again, that's the filter. So if this thing decides it wants to run all the way up here, I won't be in it. If we get a close here, a bearish close, see, look, there's a bearish close, but the next candle starts green, right? It's trying to be green. I mean, just open, but still, right? If this thing over the next 30 seconds works its way up to here, like it's doing, there's no reason for me to rush into something like that. Okay. Oh, now we're going back below the blue line. Oh, see how it's jumping around? What time is it? Is it 10:30? So we're going into the 10:30 candle. I don't know if there's news at 10:30. There might be. Okay. So if I take a trade now, I'm going into the 10:30 candle, which is very risky because if there is news, this thing can spike very easily like that. Okay. And since I'm not using hard stops, I'll lose a lot more money. So I'm not going to do it. Now, of course, it could go my way. But you see what I mean? This is why you wait for the filter. This is exactly why you wait. Look at this. If I was again overly aggressive, I'd be short over here, and now it's against me. So notice every time a short idea appears, the market just fights it. So this market may not be a short. This is it. Like if it can't sell off here, then the market's not a short. If it stops this thing out, it's not a short. There's some news. Okay. Good to know. So we have 2 minutes for that news. Right. So you don't want to take trades usually. I mean, it's very risky if you do. Like I could take the trade and I can hope for the best. Right. And maybe it spikes my way and I look like a genius. Right. But it can also do this, spike the wrong way. So PPI. Oh, I thought the PPI was at 8:30. Okay, that's pretty significant. I thought that was at 8:30. So the PPI, right? That's like the producer version of the CPI. So we're going to see a spike here, most likely, one way or the other. Let's see which way it spikes. I'm not in anything. I'm flat. Okay, and I'm not going to take a position going into that, and I'm not going to take a position on the reaction either. But we may see the candle go straight to this blue line, for example, right? And then produce a green candle up to the red line. Like it can do that easily. Let's see. Let's see how we're doing here. We got 30 seconds. Let's see. So now again, if I was short, I would be getting stopped out. Again. Okay. Oh, I was right. All right. But still 10:30 is still. Oh, so PPI, I thought PPI came out at 8:30. It's all right. 10:30 is still a significant time, right? It's also the initial establishment of the initial balance, which is the opening range plus another half hour. I misread. Oh, okay, no problem. Okay, no problem. Either way, this thing went to the stop, right? So that's what I mean. Like waiting for this signal. Now there's no signal there, right? That was a 30-second and it got stopped out. So, and you have to recognize the behavior. This is not bearish. It's higher lows and higher highs. So no more shorts. This still says bearish, but I would hold off on the shorts because this thing is not working on the short side, right? For this to be short, this thing needs to start breaking supports, right? And then maybe it's a short again, right? That's the way you have to treat this. So you don't keep putting on trades on the wrong side and keep fighting the market. As you can see, right? I've done this before where I fight the market a little bit, but as you guys can see, like I try to recognize that as quickly as possible and I don't keep fighting it. because this would be another loss. I'd be minus like $400 right now. Okay. So that you got to control your losses and control yourself in that way and just adjust. It sucks, man. You just gotta go with it and now wait for long signals. Right. And then maybe we get some long signals. But don't get all jumping around. Okay, I'm gonna check the 5-second and I gotta make my money. If you get all psychologically messed up like that, you're just asking for trouble. All right. So if you have any questions, guys, let me know. If you want to sign up for Apex, and give an evaluation a try, again, you don't need my code to get the 80% savings, but by using my code MPM, I get a small commission, and it helps me out and encourages me to do these streams because, like I said, these streams they're very hard for me to do. They're getting harder for me to do because it's hard for me to justify, this time. But if I see people are signing up and I see stuff like that, I'm like, oh, okay, people want to see this then. So then I'm happy to do it. All right. So anyway, all right. So I'll leave you with that. On Monday is my next date, right? The stream. We'll do the analysis on Monday. Remember, with Bitcoin, we bounced off that 116. This should be a wave 5. So we should be pushing 120 to 123, theoretically. Maybe not in a straight line, but we should be working our way up there, right? That should be wave 5. Once that wave 5 is completed, the market becomes vulnerable, very vulnerable, right? That's where you want to start to be careful and be very risk adverse, in my opinion. All right, makes sense? All right, you guys. So thanks for watching. I appreciate the guys that are here. Again, you could try the Trade Scanner Pro out with the link here that you see on the screen as well and try it out for 14 days. Remember, you have to watch my streams. If you try that thing out by yourself and you think you're going to figure it out, you will lose. I will guarantee you will lose. So definitely don't use real money. If you're going to say, oh, I'll figure it out myself. If you're one of those people, you will lose. You have to watch my streams to learn how to use that tool properly. And even then, as you can see today, I had 2 losing trades, a couple of losing trades, and I'm using the tool properly. Okay? So, so you have to keep the losses under control and stuff like that. When the market changes like this, that's what's going to happen. All right. So any questions, you guys? I don't see any questions. Any questions? So Monday, 3 p.m. Eastern time or 3:05 or whatever, I will be streaming again, and we'll do our Bitcoin and Nasdaq analysis and all that other stuff to see what we can expect for the week. All right. So guys, enjoy the rest of your day, the rest of the evening, wherever you are in the world, and thank you very much for watching.